Stocks pairing their gains in this holiday shortened trading session on Christmas Eve Thursday. Indexes back near the break-even line. Well, let's get a technical view of the markets from Wayne Kaufman. He's chief market analyst at Phoenix Financial Services. Good afternoon, Wayne.
Hi, Fred.
What are the charts telling you about the prospects for stocks in 2021? I was just taking a look, and S&P doesn't look overbought or oversold on the relative strength indexes. What do you see?
I think you're right. I think I'm bullish going forward. I think that you're correct. Not overbought, not oversold. Some of the recent high flyers are overbought, and they're in very late stage bases at best. Some of them are just still parabolic. So investors may have to wait for those to come down if those are the ones they really like. But overall, I think that valuation is still excellent. Market breadth has been tremendous. We had, over 90% of stocks were over their own 200-day moving average. And while that creates a short-term overbought situation, it always speaks well for longer term. On the S&P 1500, last week we made a new advanced decline line high. It would be very rare to see a market top simultaneously with an advanced decline line high. It usually means you got at least 4 to 6 more months of a bull market to go. And lastly, for Dow theory enthusiasts, you've had new highs in the Dow and in the transports. And Dow theory, for your viewers who may not know, it's a very elegant theory created by Charles Dow. If the industrials are manufacturing products, they have to be transported. So if the two indexes don't confirm each other, then that's a problem. But they are confirming each other. So you've got Dow theory confirmation on the bull market. So at worst, we're going to have to consolidate, but it doesn't look like anywhere near an important market top to me.
So you see the market's going up for another 4 to 6 months. How much?
Well, it could go up more. It could go for longer than that. Whenever you get the advanced decline line high, it doesn't mean that this was the last time we get the AD line high. It can keep going. Each time is like a reset. So now how much? That's a tough one. I think that, we've had some pretty amazing gains this year in technology and in some of the consumer stocks. So I think there's got to be consolidation. We may see as interest rates rise, because I've been telling our brokers to look for 1.3 to 1.4% on the 10-year note yield for 2021. And who knows, maybe it goes higher, but I'm pretty sure we're going to see that. And if you look at the charts of the 10-year, you could see it definitely looks like it wants to go higher. So we may see some multiple contraction. So right now we're at around a 26 PE. Maybe we come down to a 23 PE. That's possible. So that would put a little bit of a damper, even a 23 PE on the current 2021 numbers. You're going to see 3,900, maybe 4,000.
S&P 500 by around when?
S&P.
Are we talking 6 months, 12 months from now?
Hard to call, but it could be considerably higher. I really would like to know what's going to happen with the Senate election in Georgia. That's going to be a big issue.
But you do see it for next year. But on the other hand, you say, we have had a big run. We could see some consolidation. What would bring that about? I mean, commodities are on a tear as well.
Well, the two things that I worry about, commodities, there you go. Commodity inflation and any worse COVID news. I think that we're all looking towards, this is all going to be over by April or May. And I was looking at the daily numbers, and, we're up to 2,700 deaths a day. We could actually be, by the beginning of March, at 500,000 deaths here in the United States. And what happens if there's any kind of glitches with the vaccines, anything like that, this new strain that's scaring the hell out of everybody? So commodity inflation and COVID. And commodity inflation is very important because the asset cycle of markets, it goes, bond market leads, then stocks, and then commodities. So when you have a bull market cycle, first you have a bull market in bonds, interest rates come down. Then you have the bull market in stocks, And then inflation starts to kick in. You have the bull market in commodities. But then at a point, the commodity inflation becomes too much. Interest rates start to rise. Then you get a bearish market in bonds. And then because of the interest rates, then you start to get a bearish market in stocks. Then finally you get a bearish market in commodities, and it just goes around like that. So when you bring up commodities, you're dead on. That is something I'm really watching very closely.
All right. Well, thanks a lot, Wayne, for your views on the market. Appreciate it.
Thanks for having me.
Our thanks to Wayne Kaufman of Phoenix Financial Services. I'm Fred Katayama in New York. This is Reuters. Have a wonderful holiday season.